Hi everyone and welcome to the Wealth Foundations webinar. Firstly, my name is Sam Skrepis for those of you who don't know me, and I am the National Training Manager here at Clearview. I also wanted to take this opportunity to thank you very much for your time. So for the next 90 minutes, we'll be speaking about all things Wealth Foundations. So let's get started. So on the 1st of October in 2014, we actually launched a brand new product which is called Wealth Foundations. And the reason why we introduced the new product is to fill the gap in our wealth product range. And with the build, what we did was we actually sought lots of feedback from advisors and the business. And so we like to think that it's pretty innovative and competitive and has some quite distinguishing features, and it's quite cost competitive as well. And hopefully at the end of the 90 minutes, you will also think that it's innovative, competitive, and quite cost effective as well. There is no use introducing a brand new product if we don't complement what we've already got. So it is an opportunity to cross-sell life solutions, and it does complement wealth solutions as well. And as the slide does say, it really does support you in the post-FOFA world, providing right financial solutions and complementing the right financial strategies for your clients. It is our master trust offering, and it is administered in-house. So everything to do with Wealth Foundations, from its very beginnings development to the back office, to the portals, to absolutely everything administration-wise, is all done here at the Sydney Clearview office. And all of that was done in about 9 months. So let's have a look at some of the key features in Wealth Foundations. At the moment, it is available in super and pension, and that does include TTRs. When we were building the product, we tried to make the product appeal to as many clients as possible. So therefore, there is no minimum investment required for super, and we only need as little as $20,000 to commence a pension. When we talk about flexible advisor and dealer service fees, all that means is, as far as the product is concerned, we only have ICRs, and you're able to then charge your one-off and ad hoc or any ongoing advisor service fees directly from the product, and also any dealer service fees can also be taken directly from the product. All the admin fees, etc., have been built in the ICRs themselves. Now, the ICRs do range from 0.58 up to about 0.164. However, for a typically actively balanced portfolio, the ICR is around 1.1%. Now, as you'll see, it is absolutely not the cheapest product on the market. It is certainly not the most expensive. What we like to think is that it is absolute value for money, and we know that clients and yourselves really do value value for money. And with all of the innovative and distinguishing features that the product has, you should be able to see that at the end of the 90 minutes how it is real value for money. As far as the account setup is concerned, we've tried to keep it quite simple, and it has two pools. We have a guaranteed cash pool, and we also then have an investment pool. And these two pools operate independently from one another, and they are not mandatory, and they are absolutely key to the Wealth Foundations account structure. And we'll have a look at each of these pools in a little more detail very shortly. So some key features at a snapshot. It's easy to set up. So we both have a paper application form, and we also do have an e-app as well. Now, the e-app was built from advisor feedback, and one thing that we have learnt is that you guys absolutely cannot stand putting too much information in to create an e-app, because you may not actually have that information. So we've kept it really simple, and you only need 5 key things to commence an e-app. And those things are not tax file numbers and bank account details, so you'll be pleased to know about that. I can hear you now with a big sigh of relief and cheering, but we'll talk about the e-app in a little more detail in about 45 minutes or so. With the insurance, we do not have group insurance, so you are able to fund life solutions super premiums through Wealth Foundations. Life Solutions also offers an enduring rollover option, so once you click that each year, we will roll over the premium amount directly, automatically from the Wealth Foundations account, and of course that premium will be eligible to receive the 15% tax credit as well. As far as online access is concerned, Clearview Online is our advisor and client portal. One really unique thing about Clearview Online is that you're able to see exactly what your client sees. And it also houses the ever so important Wealth Foundations inbox. So let's park the Wealth Foundations inbox for the moment, and we'll talk about that very, very shortly. It's secure. So what we've done there is with the foundation assurance benefit, which is a huge distinguishing feature for Wealth Foundations. And the foundation assurance benefit, the acronym is FAB, and my aim is to make you truly think that FAB is fab by the end of this webinar, and we will definitely concentrate and talk a little bit more about foundation assurance benefit very, very shortly. You've also got the guaranteed cash pool, which we'll talk about shortly, to add to that security feature, and obviously that insurance as well. When we've developed the product as well as the portals, we've tried to have you in our minds at all times. So it's easy to maintain, not only by you, but also by your clients. So most of the things can be done online. So things like changing account details, if you need to change addresses, phone numbers, email addresses, both you or your client can actually do that online. If you need to change any of the pension details, such as the frequency, the amount, etc., you can do that all online, no forms required. Beneficiary details, if they're non-binding, you'll be able to actually change those online. Any of the investment changes, any of those sorts of things can all be done online. So it's really easy to maintain. And of course, everybody really values choice, whether that's an advisor or a client. And we've kept choice at the forefront of the design and the build of Wealth Foundations, and you'll be able to see that that is evident as we go through today's session. So let's look at the account structure. As mentioned, we've got two very distinct pools. We have the investment pool and we have our guaranteed cash pool. And the next couple of slides will really speak about those in more detail. When we refer to switches in Wealth Foundations, it's a little bit different to what is traditionally known as a switch. So a switch in Wealth Foundations is a transfer in dollars between the two pools. So if you have somebody who is in a pension phase and you, for example, believe in a bucket strategy where you keep 3 years worth of income in cash and the rest of that portfolio invested in a balanced portfolio, for example, and it's time for the annual review, you would then need to top up that cash bucket by 12 months worth of income. That's a really good example of a switch. So you would then transfer or switch, if you like, $25,000 from that investment pool into guaranteed cash. And you'll be able to do that any stage, anytime, online. The Wealth Foundations has an auto rebalance feature. And so on or around the 23rd day of each month, we will then rebalance the portion of the portfolio that is invested in the investment pool. And of course, anytime you make changes to the investment pool, that will also trigger a rebalance. Now, standing instructions are really, really important when it comes to Wealth Foundations. Now, the standing instructions are three-pronged, if you like. There is a money in choice, a money out choice, and investment pool instructions. Now, we haven't tried to dumb down the slides in any way, shape, or form. These are the words that are actually in the PDS, so we've tried to appeal to everybody and not use jargon. So your money in choice is exactly that. What pool do I want all my money to come into? Do I want my money to go into the investment pool, or do I want it to go into guaranteed cash? And The money in choice is at pool level only. Your money out choice is exactly the same thing. Where do I want all my money to come out of? Do I want it to come out of the investment pool, or do I want it to come out of guaranteed cash? Now, at this point, I have a lot of questions that say, and advisors generally ask me at this point, is money out really important when it comes to superannuation? Because clearly we're just taking contributions or accepting contributions. The answer to that question is absolutely, it is important, and the money in and your standing instructions, so especially money in and money out, are mandatory for all applications. And the reason why your money out choice is important for super is that will also specify what pool you want any of the contributions tax or any other taxes to be taken out of, and also, of course, your advisor service fee, whether that's a one-off, ad hoc, or especially the ongoing, that will also specify what pool you want that to go into. And of course, the money in choice is as equally important as it is in pension, because that will specify for those initial contributions and rollovers where they need to be placed. So each money in and money out choice is vital and mandatory across both Wealth Foundations Super and pension. And your investment pool instructions are simply that. They are instructing us how to invest the portion of the portfolio that sits within that investment pool. And they're in percentage format. So for example, you might want to put 50% in an active balance fund and 50% in the Australian shares, and that therefore 50 and 50 add up to 100%. So they're your investment pool instructions. They just specify how you want the portion of the portfolio invested that sits within that investment pool. So let's have a look at the investment pool in a little more detail. So the investment pool is where your 14 IPS strategies are actually housed. That's where they sit. So it is important to note that with Wealth Foundations, whilst this is a master trust, we are not a multi-manager, multi-sector fund. It is a master trust that has 14 model portfolios. So the IPS strategies simply stand for an investor portfolio service, which are pretty much pre-made, pre-constructed model portfolios, and they are implemented at trustee level. Now, with the 14 IPS strategies, we do have a mixture of diversified and sector-specific IPS strategies or model portfolios. And with those diversified IPS strategies, what we have done is we've given you a choice of active and enhanced indexed, and then you have a choice of sector-specific. Each of these IPS strategies have a number of underlying investment options that will sit underneath those IPS strategies. Now, these are, as I've mentioned earlier, trustee implemented. So therefore, you or your client absolutely cannot change any of the underlying investment options because they are implemented by the trustee. What you can do is blend all 14 IPS strategies if you like. Why you would want to is beyond me, but nevertheless, you do have the choice. However, a really good example of blending is that if you have a particularly cost-conscious client, you may want to blend 50% in an active balanced fund or an active fund and 50% in an enhanced indexed fund. And clearly, that will lower the ICR. Now, we have a fabulous tool, and I will show you where that is at the end. When we go through the last 30 minutes, I'll take you through the online portal. And at the end, there is a calculator called the Wealth Foundations Blend-In Calculator. And that is a really useful tool that is available for you to play around with and to determine the impact of blending different IPS strategies. The calculator will not only show you the aggregate asset allocation, including the portion allocated to guaranteed cash, but it would also show you what the new ICR is. As mentioned, you cannot change any of the underlying investment options that sit within those IPS strategies because that's done or they're implemented at trustee level. However, the great news for you and your business is that you also have efficiency gains by using model portfolios. And that is that anytime the investment committee has changed the asset allocation or an underlying investment option manager, you are not required to complete an ROA. So we will advise you that this is what we're going to do. Your clients will be advised by us. You don't have to do anything. Of course, if you feel that you do need to contact your client, then of course you can do that, and we will provide you with all that information. We also have a life stages option. And what the life stages option is it's the same for active strategies that exist in the normal menu of those 14 IPS strategies. All it means is that you, depending on the client's age, we will move them down an IPS strategy automatically on or after the rebalance of their birthday. And we will communicate with them and directly. And the life stages option is also able to be blended as well. So you might choose to put 10% of the investment pool portfolio allocation in life stages, and then the balance into an IPS active balanced fund, for example. So the moral of the story there is that you're able to blend the life stages option with any of the other IPS strategies. So this just gives you a bit of an idea on what is available. So you've got your guaranteed cash, there's your life stages as we've talked about. With the life stages option, if you refer to the Wealth Foundations at a glance leaflet, you will actually see the age and what IPS strategy they're invested in. And of course, the bottom part of that slide is showing you what 14 IPS strategies we have. So you've got the diversified active, from moderate to high growth, diversified enhanced indexed from moderate to high growth, and of course you've got your sector specific ranging from Australian shares all the way through to IPS cash. Each of the diversified IPS strategies have been aligned with Clearview investor profiles or the risk profile. So that's what they're aligned to. So please make sure, if for those of you who are from Matrix, that there is a document that the dealer group has issued that will say if you are this particular risk profile from a Matrix perspective, to use this particular IPS strategy when it comes to Wealth Foundation. So make sure you refer that, because the diversified funds have been aligned with Clearview risk profiles. So let's have a look at the guaranteed cash in a little more detail. So the guaranteed cash is pretty much an at-call cash account. It is our alternative to term deposits. It does not offer term deposits, and it operates independently from the investment pool. And the main thing to remember is that it is not mandatory. So if you wanted to have any of your pension payments or withdrawals come directly from that investment pool, you are absolutely able to do so. It does not have to go through guaranteed cash. And really important is that any balance or any funds that sit within guaranteed cash are excluded from the auto rebalancing process. So Wealth Foundations has that monthly automatic rebalance on or around the 23rd of the month. And what we will do is we will rebalance the investment pool. We do not rebalance anything that sits in guaranteed cash. So with the those underlying investment options that sit within that investment pool and those IPS strategies, as we've mentioned, they are model portfolios. The underlying investment options operate like mandates, and they're replica funds. So as you would know, in any master trust structure, the client doesn't hold the units or the assets directly with the fund manager. They are generally done through a pooled investment. We control the unit price. So therefore, anytime you make a switch or anytime you change the investment pool instructions, then if it's done before 3 p.m., you will receive today's unit price or that business day's unit price. If requests received after 3 p.m., we'll receive the next business day's unit price, and all of those transactions or requests will occur within 3 working days. So this slide is for those of you who are more visual. So as you can see, we've got the investment pool that sits here on the left-hand side, and that investment pool, you've got your investment pool instructions. So we've got $100,000 sitting in that investment pool, and we've got 80% in the IPS Active Balanced strategy, and we've got 20% sitting in the IPS Active Australian Shares, and that is in percentage form totaling 100%. And of course, everything in that pool will be rebalanced on a monthly basis or anytime you make any changes to the investment pool instructions. On this side, we've got guaranteed cash, and in this example, we've got 10,000 that's sitting in guaranteed cash. As you can see, the two pools separate, operating independently from each other. This burgundy double-edged arrow is simply depicting that you're able to switch in dollars at any time between those two pools. And again, the same analogy applies. So if you've requested a switch before 3 p.m., you would get that day's unit price, and that switch will be actioned, or that request to switch will be actioned within 3 working days. If it's requested after 3, it's the next day's unit price, and of course, action within 3 working days. These two arrows here with that call out box are simply saying, where do I want my money to go into? My money in choice and my money out choice. Could you please nominate what pool I want my money to go into and what pool I want my money to go out of? It's really important to understand that your money in and money out choice are at pool level only. And so you only choose what pool you want those funds to go in and out of. I will explain to you in a couple of slides how the allocation of that works within that investment pool. So I am now going to throw a spanner in the works, just in case you have been falling asleep. Here comes the spanner. So I've just told you that your money in choice is your default choice for all of the money that comes into that account. So here's the spanner. So you've come across a client that has 2 pension funds held, with one with BT for 150,000, and we'll say one with AMP for 150,000. So there's $300,000 that you're going to roll over. In your strategy, what you've recommended to this particular client is that you want to have $50,000 in guaranteed cash and $250,000 invested in the IPS Active Balanced in that investment pool. When it comes to the application form, you're now having to complete that and thinking, what money in choice do I put? Because I want $50,000 in the guarantee cash, and I want $250,000 to be placed into the investment pool and invested in the IPS Active Balance Fund. That's a really good question, because this is something that comes up quite often. So let me explain to you how it works. With the money in choice, rollovers cannot be split. So whatever your money in choice is, they will need to go to that particular money in choice. Any employer contributions, and that includes salary sacrifice, they cannot be split. It will simply follow what the money in choice is. BPay payments cannot be split. They will have to go to whatever your money in choice is. However, a check contribution and direct debits, they can actually be split. So whilst you say, I want my money in choice to be the investment pool, when you're making an initial contribution or an ad hoc contribution via check or direct debit, you can specify in dollars what pool you want each of that to go into and override that money in choice for that one-off contribution. So in this example where it's a rollover and you want $50,000 to go into guaranteed cash and $250,000 to be in that investment pool and invested in the IPS Active Balance Fund, I just told you that rollovers can't be split. So this is what I recommend that you do. When you're completing the application form, you would put your money in choice as guaranteed cash. You would put your money out choice as guaranteed cash. You would then also place on that application form your investment pool instructions, being 100% in the active balanced fund, as per our example. Now, when you look at that application on the surface, it actually looks like you are a little bit on cloud nine, perhaps had a bit too much champagne or something else, because you're actually saying, I want everything to go in cash, I want everything to go out of cash, but you're also providing us with investment pool instructions. Now, our administration team have been briefed, and they are now fully aware of what you're going to do. So when we receive that particular application, we will then place that money in choice option as guaranteed cash, place the money out option as guaranteed cash. We will then set up your investment pool instructions for you, so it's all there ready. When that rollover comes in from BT, so that's $150,000 from BT and $150,000 from AMP, what you would then do is you as the advisor would go onto the portal and switch $250,000 from guaranteed cash into that investment pool. Now, your investment pool instructions have already been loaded onto the system by our admin team. So all that's required from you is to switch $250,000 from guaranteed cash into that investment pool. Now, you do not need to complete any file notes or an ROA or whatever, because from a compliance perspective, you are absolutely safe, because all you are doing is executing the advice that is in your SOA that the client has agreed to by signing the authority to proceed. And of course, all of the application forms as well. If you wanted to, you could make a 1 or 2 line file note to say that's what's happened, that's best practice, but you're not required to do so because you're simply executing what's in your SOA. Now, the reason why we recommend that you would put your money in and money out choice in this particular scenario to guaranteed cash is guaranteed cash does not have any buy-sell spreads. If you were to invest the money into that investment pool first and then switch the $50,000 out of the investment pool into the guaranteed cash, then you are going to have buy-sell spreads apply. So that's the reason why we strongly recommend that you would put in that scenario your money in choice is guaranteed cash, money out choice is guaranteed cash, and then make that switch of $250,000 from guaranteed cash into that investment pool to avoid those buy-sell spreads. So that is how you would tackle that one. The other thing I just want to point out at this time, as it is fairly relevant, is we do have a couple of, there are 2 different processes for funding pensions in Wealth Foundations. If you're funding a pension with rollovers only, what will happen is your client will receive one welcome pack, and we will one account number. We will then the money gets invested from that very first rollover in line with those investment pool instructions. I call it the switch is down. So the switch is down simply means that we will accept all the rollovers. Once all the rollovers have been received, we will deduct your advisor service fee, if any, flick the switch on, and the pension commences and your client's account number remains the same. If you are funding a pension with an account, a rollover and an initial contribution, whether that is check or direct debit, the procedure changes slightly. We will open up a Wealth Foundations super account that generates a super account number. Your rollovers will be invested in cash. The initial contribution is invested in cash. Once all of the funds have been received as per your application, we will then once we've received all of the funds, we will then deduct your advisor service fee if you have charged one. That will receive a 15% tax credit because it's in super. We will then close that super account. Your client will receive a member exit statement. We will then open up a pension account. Your client will now receive a new pension account number and then the funds get invested in line with your investment pool instructions, and the pension will commence. So two slightly different processes to fund a Wealth Foundations pension. All you're required to do, of course, is complete the pension application form, and we do this in the background. I just feel it's really important that you understand those two the slight variance in process, so you're able to position with clients if you're making an initial contribution to fund a pension, and it's not simply by rollover, that they will receive a super account number first, then closed, then will receive the true pension account. So it's just important to position that with clients at that time. So this diagram here is simply just showing you that in the event that you blend IPS strategies, you will find more often than not that the IPS strategies will share a common underlying investment options. And in this particular scenario, as you can see, the fund number 3 is in both IPS strategy 1 and IPS strategy 2. So what the bottom diagram is showing you, not that we had a war here at Clearview, that we had a green team and a burgundy team and we didn't know what color to choose. What that's showing you is that you and your client in that circumstance will actually see the fund listed once. So for example, if Platinum International was in both of these particular IPS strategies, you will not see Platinum International listed twice. That would be silly. So what you will see is Platinum International listed once, and it will have a higher asset allocation and of course a higher percentage of that allocation and balance. So that's what you will actually see in that circumstance. So we'll amalgamate them on your behalf automatically. One of the great features, and it is fairly, I wasn't allowed to use the word unique, so this is fairly uncommon, is the smart allocation process. So all contributions to Wealth Foundations Super into that investment pool will follow the smart allocation process. And my word is this smart. So what smart allocation actually is we, for each and every contribution that comes into that investment pool, we not only look at what the target asset allocation is at the underlying investment option level, we look at what the client actually holds in each of those underlying investment options at the time of the contribution. And if any of the underlying investment options happen to be underweight at the time of the contribution, we will add more of that contribution to the underweight option. Now, this is not a rebalance, so therefore, if something is overweight, they will more than likely receive some contribution, but it will be less to the overweight option, more to the underweight option to bring that to as close to target as possible. So what this actually does is when we are rebalancing in 3, 2, or 1 week's time, it minimizes any of the unnecessary trades, which means that any of that nasty CGT that lurks in the background and any of the buy-sell spreads, we are avoiding those sorts of things. And that's what the smart allocation does. So on the reverse side, if your money out choice happens to be the investment pool and you have blended the IPS strategies, what will actually happen is each of the payments or withdrawals from that investment pool will come out proportionately across IPS strategies and of course across each of the underlying investment options, and that will go in line with the target. So both the smart allocation process and the proportionate withdrawal process from that investment pool is designed to ensure that your client remains to as close to their risk profile as possible 365 days of each and every year that they are within Wealth Foundations. So if that's not smart, I don't know what is, and I know that I can hear you all saying, wow, that is really clever. So that is one of our distinguishing features of Wealth Foundations. Now, foundation assurance benefit, this is fab. And my word, is it fab? And I am allowed to say that this is unique. So when we were developing the product, we sought feedback not only from advisors, but also from various parts of the business. And this particular suggestion came from the life part of our business. So what Foundation Assurance Benefit does is, in essence, it protects the client against any market falls in the event that they become ADL TPD'd up until the age of 65. Now, for those of you who don't know what ADL TPD is, it's just an acronym that stands for Activities of Daily Living, and it is a extremely strict definition of TPD. You pretty much need to be a vegetable. You cannot bathe yourself, you can't feed yourself, and that's up until age 65, or death at any age. So what we would do is, when we receive a claim, we will go into automatic pilot mode. You don't need to write a letter. You don't need to call Simon Swanson. You don't need to call the Prime Minister. Okay, it happens automatically. What we will then do is we will run a calculation, and we look at all of the money that has come into that account since inception, and we look at all of the money that has gone out of that account. So all the money in and all the money out. Now, the easiest way to think about money out is any physical debit that has been made on that account. Any physical debit that appears on a client statement. So money out will include ASFs, taxes, pension payments, commutations, withdrawals, insurance premium rollovers, any rollovers out. It does not include the ICRs because they are clearly indirect and they are a part of the unit price. So it's just a physical withdrawal from that client's account, or a physical debit that appears on that statement. So we look at all the money in and we look at all the money out. And that forms what we call the Foundation Assurance Notional Floor Amount. Bit of a mouthful, and you can thank compliance for that, but that is the name of the FAB benefit, the Foundation Assurance Notional Floor Amount. Now, if that floor amount happens to be greater than the account balance at the time of claim, we will make a one-off top-up payment to a maximum of $250,000 per client. That comes at no extra cost. It's included all within the ICRs, and it is extremely transparent because it appears on every statement, and every time you log in to Clearview Online, it's flashing like a neon sign in Rhodomine red, or as you would know it, the Clearview pink. It's right there flashing, letting you know what this is. And this is available in both super and pension. Now, if you do not think that that is fab, I really don't know what is fab. So that is a really unique feature we've got. So let's just have a look how it works in reality. So we have Poppy opens a Wealth Foundations super account in year 1, and she makes an NCC of $150,000. For the next 3 years, she makes concessional contributions of $10,000. And of course, each time that $10,000 contribution is enters Poppy's account, there's a $1,500 contributions tax for that. And of course, life isn't free. We don't come cheap. So your ongoing service fee is $75 a month. There are no other withdrawals. So what's happened is in year 4, Poppy has received her account statement. Markets are really bad. So Greece has defaulted on loans. We've got the US that hasn't recovered properly. We've got Portugal in trouble. Things have gone crazy, or perhaps even Bronwyn Bishop is taking chopper rides. I don't know, but something's happened to the market, and she's opened up her statement, and there is and her balance is $140,375. What she's then done is she's collapsed, fell down the stairs, and she's passed away. We have now been notified of Poppy's death. So we now go into automatic pilot mode. So we look at all the money in. So you've got your $150,000 initial NCC plus your 3 lots of $10,000, making that total money in for those 4 years $180,000. And then we look at all the money that has gone out. So you've got the advisor service fee, which is around $3,525. And then you've got 3 lots of contributions tax, which adds up to $4,500. So the total money out during that time is $8,025. Now, of course, if Poppy was funding any life solutions, super premiums, or made any other withdrawals, they would also be included, but for the purposes of this example, there were no other withdrawals. So your $180,000 minus your $8,025, that will form the foundation assurance notional floor amount, which in this case happens to be $171,975. However, what was her account balance? $140,375, I hear you all say. So that is a difference of $31,600. And in this particular circumstance, the FAB benefit is $31,600, and we will make that top-up payment to Poppy's beneficiaries or estate, depending what her death nominations were, and that is how FAB works in reality. That is truly unique and a really distinguishing feature and quite innovative from a Wealth Foundations perspective. Now, as far as beneficiary nominations are concerned, we offer non-lapsing binding, non-binding, and reversionary. Pretty standard across the board these days. However, another innovative feature with Wealth Foundations is that you are able to have a reversionary and a non-lapsing binding at the same time, clearly to pension clients. Now, this is really good for elderly clients who are both in pension, who perhaps have a reversionary nominated to each other, because people will come in and say, look, what actually happens if I pass away at the same time, or Jack and I pass away at the same time? What's going to happen to our money? So in this particular case, you might want to have a reversionary to each other and have a non-lapsing binding to the adult children. Now, the logistics of this simply means that at the time of claim, assuming that the reversionary is valid, i.e. the reversionary recipient is still alive at the time of claim, and that it's obviously a cis law dependent, then the reversionary will always supersede the non-lapsing binding. So that is something that is fairly innovative as well, and a distinguishing feature. Any of the non-binding nominations don't require forms, and they can be updated directly online. A great thing about the non-lapsing binding is whilst you still need to have signatures and have them witnessed, you can obtain that form through the portal. Once it's been completed, signed and witnessed, we will accept scanned copies and we will act on those. So you don't need to provide us the original, which is great. So how do we communicate with you and your clients? As far as from a Clearview's perspective, it's quite innovative. All correspondence, with the exception of 2 things, is electronic only. And everything will be stored in that infamous Wealth Foundations inbox. So let's just go through a very quick timeline. First of all, it is absolutely mandatory that you provide us with 2 key things with your application. One is we require the client's tax file number. Now, even if the client is 63 and about to commence a transition to retirement, you're probably thinking, Sam, you don't know what you're talking about. The client's over 60. He doesn't need to complete, or she doesn't need to complete a tax return. No tax on it. Thanks very much. You don't know what you're talking about. I am telling you, absolutely, you are required to submit a tax file number for every client in Wealth Foundations. If somebody is over 60, then you are not required to complete the TFN declaration, but you are required to submit the tax file number. The reason for that is really simple. One, it helps us with our reporting. As you know, we are very regulated. The reporting requirements from a product manufacturer point of view to regulators is quite intense. So the tax file number assists the business with its reporting obligations. And the second thing is that a lot of Wealth Foundations is actually done via automation. And so with the tax file number, especially with SuperStream, it's just that added extra check that we do with rollovers, etc. So that's what it does. The second thing that you are required to provide us is a client's email address. Now at this point, I get a lot of questions, so I will preempt them. And the first one is that if the client doesn't have an email address, I assume that you would actually have a discussion in your interviews or meetings with clients around if the client has any power of attorneys or any sort of guardianships, etc. And if the answer is yes, then perhaps consider using that person's email address. If they don't have a POA, then the third thing we would suggest is have a conversation around if the client has any trusted family member or friends, i.e. son, daughters, cousins, brothers, sisters, best friend, etc. If the client doesn't have any of those, then you would need to set up an email address for the client on Hotmail, Gmail, etc. Absolutely do not use your email address because it is against the business rules, and we will then probably get in touch with you. And if you don't provide us with a valid email address, then the application may be rejected. So a client email address as well. Now the reason for that is, as you can see, hopefully by now, that the product is fairly innovative and it has got some quite distinguishing features on it. And so therefore it has been priced competitively, and so it's been priced with a lot of the communication to be via electronic means in order to keep it reasonably and competitively priced and still keep some of the distinguishing features that we've got. So how do we communicate with you and your clients? So let's go through a quick timeline. You have had an initial meeting with the client. Client's agreed. You've gone away, come up with an SOA. You've now presented the SOA. Client's really happy. Thanks. You've signed the ATP and now you're completing the application form. Client signed it, all good to go. You've now submitted the application form to us. What happens now is we will then send your client a welcome pack. And in that welcome pack, and it is literally a pack, it's in a nice folder, it's got a welcome letter, it has an account summary, it has their money in confirmation, and if it's a super client, it's going to have a choice of fund form, how to contribute. So we'll have all of the contribution types with the BPay code along with an individual CRN for each of the contribution types, and it will also have the compliant fund letter. If it's a pension client, it has all the same things, but instead of having the choice of fund form, how to contribute, and the compliant fund letter, we will pop a Centrelink schedule in there. It's really important to understand that that initial Centrelink schedule is the client's responsibility to take that to Centrelink. And operative word in the sentence there is the initial Centrelink schedule. What will then happen is now that welcome pack is sent to them hard copy. So that goes to their address. So the client gets that physically. We will then also upload that welcome pack into the Wealth Foundations inbox. And just hold the Wealth Foundations inbox thought for a moment. The second thing that happens is we will send the client an email. And that email will say, here's the link to Clearview Online. Here's a unique PIN. Could you please enter this PIN along with your surname and date of birth? And could you please choose a username? So if you wanted to be called Sexy Sam, you can be called Sexy Sam. The moral of the story is the client chooses the username. Okay? And therefore, they will go in and they can change their password, etc. Each and every year, we will also send the client a member benefit statement, because we understand that once you've opened up a super account or a pension account and you never hear from that super fund provider again, you become a little disengaged, and we certainly don't want disengaged clients. So we will actually send an annual statement to them, to their hard copy to their mailing address. That statement is also uploaded to the Wealth Foundations inbox. each and every other piece of correspondence is now done online. So if you have clients change their address, phone number, their investment pool instructions have changed, etc., then we would generate a letter. That letter is sent directly to the Wealth Foundation's inbox. The client will then receive an email notification, and it's really important to note that it is an email notification. The physical letter does not get emailed out. Okay, so the email notification goes to the client and says, "Hello, Sam, you have mail, you've changed your contact details, or your investment instructions have been changed," etc. So there will be a subject line. Please log into Clearview Online and check your Wealth Foundations inbox. You as the advisor will also receive that same email notification. And it will say, "Sam has changed his account details," or whatever that happens to be. And you will then be able to log in and into my account on the portal and look at what that piece of correspondence happens to be. Now, before you say, "Do you know what, Sam, I'm about to go to the hardware store, buy a dartboard, put your photo on it, throw darts at you, because I'm actually planning to write lots of business in Wealth Foundations, and I'm going to have 150 clients, and you're now going to inundate my email box." Well, we've thought of that. We're one step ahead. So you will receive as an advisor one bulk email in a 24-hour period that will list all of the email notifications that have been sent to any of your clients. The whole aim here is to free you up to do things that are more useful rather than changing people's addresses, etc. But under no circumstances is it there to take you out of the loop. And that's the reason why you receive those email notifications. So if I'm trying to move to Darwin, I would never do that. But if I had to move to Darwin, then, and I haven't told you, you'll then be able, you get that email notification and say, "Oh, Sam's moved," and then you'll be able to touch base with your clients that way. The other great thing, and I'm going, for those of you who have lots of pension clients, please, now is the time to restrain yourself because you're going to be really excited, is that twice per year, and that happens in February and August, we will automatically upload electronically the client's Centrelink schedule directly to Centrelink, and we will then upload that Centrelink schedule onto Clearview Online. So that now will avoid all of those, that phone going berserk and all those phone calls that you get in your office around that time of year because the client's received a letter from Centrelink saying you haven't provided us with your Centrelink schedule. They then ring you. You then have to ring up the product manufacturer, etc., and it's this vicious circle. This now totally removes all of that, again, freeing up your time, making it more efficient for you. And so that's what will happen with the Centrelink schedules. And also, if you or your client require an ad hoc Centrelink schedule, so outside of February and August, you're able to either call the call center, or really fantastic is you're able to log into Clearview Online, and I'll show you where this is later when we go through the portal, and actually request a Centrelink schedule directly through the portal, which is fantastic. So speaking about Clearview Online, we will go on to it shortly. When we introduced Wealth Foundations, we not only introduced the brand new product, but we introduced a brand new system, and that was a back office system as well as the client and advisor portal known as Clearview Online. We went out and tested that with a whole bunch of advisors, and the feedback we got in that initial testing phase, and even up until today, and we've been live almost a year now, is that it's very user-friendly and it's intuitive. The way I like to think about Clearview Online is if you can use internet banking, you will absolutely be able to use Clearview Online. You've got both full and read-only access available, so for those of you who have support staff, and maybe that support staff supports more than one advisor. So you can actually have each of you have your own login, and that login can be linked to different advisors. We prefer that that's the way it works because then there's a clear audit trail. Okay, but you've also got read-only access if that's what you want. So somebody only be able to view and not be able to do certain things, but that's also available. And of course, it houses the e-application, and you can do direct rollover initiations through SuperStream, but I'll talk about that shortly. And there's online help available as well. So it's a great portal, but we're going to spend about 25-30 minutes on that very shortly. As far as the application process is concerned, as we mentioned earlier, we've got both a paper-based application and an e-app as well available. With the paper application, there's one application form for both super and pension. All that means is that when you pick up the application form, it does appear to be quite fat, and that's because it's super and pension in one. And also any of the forms that you may require, such as the TFN deck, rollover forms, AML, etc., they're also at the back of that application booklet. Now, you may not need those, of course. We strongly encourage that you use the e-application when it comes to Wealth Foundations. And the reason for that is because it is really simple to use, and we've developed it with advisor feedback, and I'll talk about that very shortly because I think the next slide is about e-applications. We've mentioned the fact that you need the tax file number and the client email address. It is absolutely mandatory, and please don't use your own email address. All of the mandatory sections on the application forms are also marked with an asterisk, so just please make sure that all of the sections that have got an asterisk next to them you do complete. I just also want to bring to your attention at this point, when we do say that there is one application form for both super and pension, if the client is inevitably going to end up with two accounts, i.e. a transition to retirement, a Wealth Foundations Super and Wealth Foundations Pension, for goodness sakes, we need one super application form and one pension application form completed. We can't just have both, so we can't just have one, so please make sure you complete the two. We use SuperStream, so all of rollovers are processed via SuperStream. So generally, we send the request off and everything is generally finalized within 5 working days when we're using SuperStream. So you need the USI to be provided. Now, I just want to focus on the rollover for the moment. If you're using the paper-based application, you will actually see that in section 2B, it will ask you for the rollover details. So in section, and this is for a paper application, so when you're completing that section 2B, if you have the from funds name, USI, the ABN, and the approximate amount, and is it a full rollover or partial rollover? If you put anything in section 2B, paper application, you do not require a rollover form. So by putting details in section 2B and having the client sign the application, we will initiate all rollovers that are listed in that section 2B. So you don't require a rollover form. Section 2B also does not have room for a client signature, because a part of the feedback we received from advisors was that you wanted to have a streamlined application process, and that one of the biggest things, or one of your pet hates if you like, is that we have so many signatures required on an application form that you may then forget to sign on a particular section. So what we've done is we've built big fat disclaimers, if you like. So I think there's a 2.5-page disclaimer at the end of the application form that the client signs. And in that disclaimer, they are authorizing that anything that is placed in section 2B, we will initiate the rollover for. So you don't need a rollover form. We get that application form and we will then start initiating the rollover through SuperStream. So if you're going down the paper-based route, it's really important to understand that if you are recommending Wealth Foundations Super and Life Solutions, which is obviously our life insurance product, and you're using Wealth Foundations to fund it or whatever it is that you're going to do, you would then submit that Life Solutions application first, because you would want to make sure that the insurance has been potentially accepted before rolling over Wealth Foundations Super. If that is the case and you are completing a paper-based application, please leave all the details blank in section 2B and just place a note that just says rollovers pending life solutions acceptance. So then when our admin team receives the application, we know that there's no money, we don't know any of the rollover details, so we'll set that up, but that lets us know that you've submitted a life solution super app and you're waiting for underwriting to come back with the answer. At the back of the application form, there is some rollover forms. So at the time, you would also complete those rollover forms, have the client sign the application form, have the client sign the rollover forms. You would submit the application, but clearly you would just hang on to those the rollover forms until you've heard from Life Solutions Super. Once you have received the news, and it's going to be fabulous news that the Life Solutions Super has been accepted at standard rates, you then have two options. One, you could submit the rollover forms to us and we will then initiate that rollover on your behalf. Or two, you can go onto the portal and initiate the rollover yourself because the account has already been set up. And I'll show you where that is. So the moral of that story is if you are going to go down the paper-based route, and really once you see the e-app, they shouldn't really be using the paper one because the e-app is really easy. But if you do go down the paper-based route, please do not complete section 2B if you don't want any rollovers to occur at the time of the application until our insurance has been accepted. So put a little note there that says pending Life Solutions Super acceptance. Have them complete some manual rollover forms, hang on to those until you're ready to initiate the rollover and either send it to us or do it yourself through the portal. So that's really important to note. A couple of other little differences is that with the application process, the pension payment page, you may be used to saying, I would like $12,000 paid monthly, and I know other providers such as CFS will actually interpret that and make it $1,000 a month. What then happens, and again, based on advisor feedback, when you do that, there's been some pro rata issues once the new year kicks in. So with Wealth Foundations, what you would need to do is actually specify the amount that you want with the frequency. So if it was $1,000 a month, you would need to write $1,000 paid on a monthly basis. If you want $2,000 paid quarterly, then you would need to do that. So that's one big difference with us. And speaking of pension payments, we pay them on the 15th of every month, and the twice monthly option, so it's not fortnightly, it's twice monthly, and the twice monthly option is paid on the last business day of the month. Other than that, it's the 15th, and if it's twice monthly, the last business day of the month. So please make sure that you actually specify the amount that you want and the frequency, not $12,000 paid monthly, because we will actually pay $12,000 a month. We won't actually put $1,000 a month. And the other thing that's really important, or could be a little bit different to what you're used to, is when you are specifying your advisor service fee, whether that is a one-off fee, an upfront fee, or an ongoing fee, what you need to do is actually put the amount on the application form that is exclusive of GST. Do not include the GST. So the example that we use on the application form is if you wanting to charge an upfront fee of $1,000, and that's what you actually want to receive in your pocket, what will happen is we will pay you $1,100. So that includes the GST portion. Okay, your client will then actually, what we then do is we will then add the GST. We apply the RITC to that. So your client will then be charged 1.25%. Okay, so in this case, your client will actually get a fee of $1,025 debited from their account. But then straight after that, they will receive a 15% tax rebate. So they will receive a credit of, I think in this case, it's about $171 odd, meaning that the total net fee that the client pays is about $170 odd. even though you've said to them they're going to pay $1,000. Okay, so at the moral of that story is, please remove the GST before you place any fee on the application form when it comes to Wealth Foundations, because we will pay the GST to you on top of that fee that you've placed on the application form. And the rationale behind doing it that way is that the RITC rate and the GST rate can change at any time. They're out of Clearview's control. And so by doing it this way, it just makes sure that the fee that you actually want is what you get, because the process of the GST and the RITC falls outside that. So it's just making sure that your fee is actually not going to be jeopardized. So let's just concentrate on the e-app for a few minutes. So with the e-app, it is straight through process. So anything that you do on that e-app will go straight through to the back office system. That has the ability to reduce error rates, obviously, because that means that our admin people are not doing as much data entry, but they are doing some data entry, but they are also looking for errors and exceptions, which is great. But with the e-app, it is based on advisor feedback. It's really easy, and again, I will say that there's really no excuse not to be using the e-app. You only need 5 key things to commence the e-app. 1, you need the client's first name. 2nd, you need the client's surname. 3rdly, you need the client's date of birth. 4thly, you need to, based on the client's date of birth, a number of eligibility to contribute questions will be asked. So we're just trying to obviously make sure the client can contribute into super. And once that's done, you just need to tell us, is this a super or a pension account? That is all you are required. Once you've entered those into the system, you've created a shell account, and an account number is then produced. And that's called the core phase. So you've done that, and you'll now move into the next steps phase. And then you're able to go in and complete as much or as little information as you want. So beneficiary details, investment pool instructions, stand-in instructions, addresses, date of birth's already there, addresses, email addresses, tax file numbers, etc., etc., etc. You can put as little or as much information as you like at that next steps phase. Once you have done it, so our e-app pretty much, if you think about it, is pre-filling an application form, pre-populating an application form. Once you've completed that application form, as much as you can, you would then generate a PDF. And that PDF is pretty much the application form with all of the pre-filled details on it. Once you take that to your client meeting, you didn't have the tax file number and the bank account details, for example, you would then be able to handwrite that tax file number and bank account details and any other missing information on that PDF. So that PDF is going to have some printed and some handwritten information on that application form. You would have the client sign that application form. Once that client leaves, you would then just submit that partially typed, partially handwritten, signed application form to us, and we will then process the application. It's as easy as that. What you do need to bear in mind is that each of the e-application, each of those PDFs that you've generated from the e-application has actually been date stamped and version controlled. So it might actually have version 1 on it. What admin will do is they will check that the information that you've got on version 1 in the system is the same version that the client has signed. So what I don't want you to do is to go, once the client has left, is to go into the system and then into the e-app and complete the handwritten details and then generate another PDF, because that's got all of the information on it, and then submit that to us, because clearly one won't have the client's signature, or the previous version is going to have the client's signature, but the handwritten information will differ to what's actually in the system. So the moral of the story there is, once you've completed as much information as you can, generate the PDF, complete the rest of it by hand, have the client sign it, and you submit that to us. You just need to make sure that the last generated PDF, the last version on the system, is the one that you're submitting to us. So it's just pre-populating. So it's really, really easy. I've also created an e-application user guide, and I'll show you where that is on Clearview Online to assist you. But it's really, really easy. So how does the cost compare? Look, I don't really want to spend too much time on cost as I'm not a BDM here. So just gives you a little bit of an indication that we're pretty much on par with our key competitors. The two burgundy collars here will just tell you that the first one is if you are it's 100% active balanced fund. If you blend 50% active and then 50% index, it just shows you that you can significantly reduce the cost. So that again is a really good example of when you have a particularly cost-conscious client, that you're able to then blend those portfolios. And this graph is just showing you that cost is pretty much a commodity and we're pretty much all the same. So that's what that's saying. So at this point, I would actually say, do you have any questions at all? Now, before you think that this is really real and live, let me remind you, this is a recording. So please don't start asking questions on the phone, because your colleagues will probably look at you and think you have gone mad. If you do have a question at this time, then perhaps it's time to pick up the phone or start keying and send in some key people emails. And here are the people that can help you. So we've got Ateet, and Ateet is the head of platform distribution, and I'm sure you would have met either Ateet or Heath by now. Heath is our national business development manager. Of course, he's available for you as well. The most important person on the slide is me. So there we go. So if you have any questions, perhaps shoot me an email or give me a call as well. We've also got our business implementation managers, and each advisor practice has been assigned a business implementation manager. So we've got Brendan Knight, who is based in Queensland, Catherine Lavender, who is based in Victoria, and both Tanya and Alex are based here in Sydney. If you don't know who your business implementation managers are, then perhaps get in touch with Ateet or Heath, and they will be more than happy to let you know who your BIMs are. The role of the BIM is to a couple of things. One, they're able to pre-vet your first few applications for Wealth Foundations. And second of all, they can help you transition a book of existing business over into Wealth Foundations or Wealth Solutions as well. But for more information, for that, the best thing to do is to contact Ateet or Heath in that respect. And of course, we have our dedicated and experienced Wealth Service Centre, and they are dedicated to Wealth Foundations. We administer this in-house, as I said earlier, and they go through lots of training. So they are equipped and waiting for your call, and their details are there for you, 132 977, or you can send them an email to advisor.wealth@clearview.com.au. So as you can see, you have an abundant amount of support available and resources for you to use. So again, if you have any questions, please don't hesitate to give any of us a call or shoot us an email, and we'll be more than happy to help you. So again, questions, don't ask because people think you're crazy. Send an email to any of those people on that slide. So just before we finish up, I just want to spend the next 20 minutes or so just taking you through the portal. And it will help if I actually put the right password in. So let's just quickly do that. So just quickly, whilst I'm finding the password, which I thought I put in correctly, with Clearview Online, the way you would actually access Clearview Online is through the website by clicking on the advisor login on the top right-hand side, and then there's a drop-down box that will appear, and you would then obviously see Wealth Solutions, Wealth Foundations, Life Solutions. You would click on Wealth Foundations, and then you would be able to access the system. You won't log in this way, as this is my training site, not the production site. So here we are on the portal. So this is your dashboard, and again, the great thing about Clearview Online is that you see what the client sees once you are in a client record. Now, this is the advisor dashboard. So the client won't see this, they see something similar, but once you're in that client record, you'll be able to see what the client actually sees. So the way you would navigate through Clearview Online is simply by using the menu tabs up on the top bar. So my overview will always take you back to your dashboard from any screen. You can search for a client through here. So you've got the most recently 5 accessed clients you can access here. If you need to search, you simply put the criteria as it says here: client's name, date of birth, account number, name, etc. Through here, press go, or you can also do it through the client search tab. My reports, we've got 3 reports that you can use, but these reports are not client facing. They are simply for advisors, and so that there simply replicates what is actually here. So the quick links, and today would be nice. There we go. So that simply replicates that. My details, what that does is if you actually change any of your details, so such as addresses or fax numbers, mobile numbers, you can actually change that here, and that will feed through to your clients when they log on to Clearview Online. My tools, so you can see product details are here. Any of the forms that you need will generate a link to the main Clearview website, and that's where you can find the forms. There's a glossary that has terms, for example, not only for Wealth Foundations but for the industry, and your client can see all of these. News for any newsletters. And advisor tools, your client clearly can't see that, and I'll go through the advisor tools shortly. And then you've got your e-application, and that's where you would generate one. So let's just have a look at a client record. So we just go back to our dashboard. So we'll go into James Christopher Smith. So we just click on his name. So now you're able to see what the client is actually seeing. So this is the client's dashboard. The difference is though, when you are in a client record, you navigate by using the left-hand side panel, which is here. The difference is that your client, you don't use, these menu tabs when you're in a client record. And your client will actually see my portfolio, my account details, my inbox, my advisor, and my tools. They will see those details up here, whereas you're seeing them down here. So all the client's accounts will be listed for you here. So in this particular case, if this was a Wealth Foundation Super and Pension, they will actually be listed here. In this case, there's only one account, so that's fine. This will show you what the balance was on a particular day. Super cute, I say. Hover your mouse over those particular dates and you can see the balance on those dates. So if we want to go to account summary, what the account summary screen does is it gives you an overall view of that account. So it looks at all the money in, all the money out. It tells you what the investment earnings are and account balance, which is great. Okay. It also, if again, you can switch if there's more than one account by using the drop-down box anytime you see this, and you can choose the account. And every screen has a help button. So if you press that, it will tell you what that screen actually does. So that's your transaction summary. Here's that foundation assurance notional floor amount as promised in Clearview Pink, or officially known as Rhodamine Red. There it is. And as you can see, this particular client is better off either AD or TPD'd. Make sure he's before age 65 though, or dead. And he's $90 better off, as you can see. So that FAB amount is there. This gets everyone really excited. So your preservation components and taxation components, including the eligible service date, are all found here online. So that's really good. So your current valuation screen, what this does, it shows you what the client's investment pool instructions are. And as you can see, in this particular account, we've got blended across 3 different of the IPS strategies. And here are all of the underlying investment options as well. And we've also got a portion in guaranteed cash. The great news is if you click on the underlying investment options fund's name, it will show you what trades have occurred at the underlying investment option level as well. So that's what that does. Okay, so the asset allocation, I mean, there's only so many ways one can depict that. So we've got a pie chart and we've also got a list. This is a really good screen just to show you anytime you see the export bar, you're able to generate, and don't forget you or your client can see these things, by the way. So your client can go in and see this, and you can go in and see this, and you or your client can generate a report anytime there's an export bar in either PDF or Excel format. So if we just press go, this is what the report will actually look like. I don't like Excel very much, so we'll do it as a PDF. Waiting. So this is a training environment, so sometimes it does get a little slow. It's really not wanting to work. Okay, there we go. So this will come up in PDF form. Okay, there it is. We'll make it a little bit bigger for you. Okay, so that's what it will look like. So you or your client can do that, which is good. Let me just see if I can close that. Okay, fantastic. Okay, so your standing instructions. So this is where, so one thing to remember with Clearview Online is anything that is investment related, so such as money in choice, money out choice, and your investment pool instructions, the advisor, so you are the only person that can make changes. Your client will be able to see this screen, but these edit money in, money out choice and the edit investments will be in a light pink and read only mode. So your client will not be able to actually go in and start changing their money in choice, money out choice, and they certainly can't change their investment pool instructions. So you've had a discussion with your client though. If you wanted to change your money in a money out choice, you would simply just do that. We're in pension, hence why there's only money out. So that's what you'll be able to do here, and just press save. And exactly the same with your investment pool instructions. So bear in mind, what I am showing you here is execution only. So let's pretend I am an active balanced investor and you've taken me out, or my friend I should say has taken me out to the cricket. For anyone who actually knows me, you would know that I love champagne. So they've got me drunk now on Verve, and they've told me how wonderful international shares are and that I really need to invest more in international shares. I've then come back and given you a call as my advisor and come in and seen you and said, do you know what, I need to up my risk profile. I don't want to be a balanced investor anymore. I want some more money in international shares. You've had that discussion with me. That's fine. You would then need to still do an ROA at this time. So this does not alleviate your compliance responsibilities in any way, shape or form. Okay, but once you've done all of your compliance obligations such as an ROA, you would simply come onto the portal, and let's pretend I was 100% inactive balanced. You would then change this to 60%, go to the international share fund, which is down here, international shares, and you would then pop 40%, press save. You have now changed my investment pool instructions. It's as simple as that. And of course, that same rule applies. Before 3 o'clock, we'll receive today's unit price, actioned within 3 working days. And if it's after 3, it will receive the next business day's unit price. And that's as easy as it gets from an execution perspective. So that's what you would do. You can do this, your client can't. There's the switch button. This doesn't even appear as an option for your client. So switching is here for you. So again, it's that annual review time, and you have me in a bucket strategy where I have my 3 years worth of income in guaranteed cash. And you now want to top up my 3 years or 12 months worth of income. You would simply go in here, you would enter the amount. So we'll just say 20,000 at this time. Okay, it says on here, make sure that the arrow faces the direction. So in this case, investment pool to guarantee cash. It then tells you transfer 20,000 from the investment pool to the balance to guarantee cash balance. You would then press continue and it would execute that for you, or you change the number to the arrow. And clearly I don't have the funds there. If I did though, you can do vice versa. So that's your switch button. This is not even an option for your client. It can only be done by you. And a transaction history will list all of your transactions. You can use the filter by type, and you've also got a date filter as well, and you can export those. So as far as client account details are concerned, this is all of the client account details, so contact details, addresses, etc. If the client needs to change anything or you, press edit, change them, save them, and that will happen. Beneficiaries, this lists all of the beneficiaries for you. So it will let you know their name, the date of birth, what the percentage is, the relationship, and what type it is. So both reversionary, non-lapsing binding, and non-binding are here. Non-binding beneficiaries, if you click this register new non-binding, you're able to, and the client, you or your client can go in and put any non-binding in. And of course, the death benefit nomination form is required for a reversionary or non-lapsing binding. You can print that out, complete it, sign it, have it witnessed, and we will accept scanned copies. Pension details. So this screen here just shows what the pension details are. So the amount they're getting, the frequency, etc., and also what bank account details are being paid. Your client or you can actually go in here and change the frequency or the amount. Don't forget, if any of that occurs, the client, that will generate a piece of correspondence. That correspondence gets sent to the Wealth Foundations inbox. The client will then receive an email notification saying pension details have changed. You will also then receive a correspondence saying that Sam's pension details have changed. If you weren't aware of it, you were then able to have a look at what I've done and contact me. So that's what happens there. Now, on the flip side, when it comes to anything bank account related, the client can change their bank account details for anything. You can't. You're simply able to view them, but you won't be able to change them. Just like the client can view anything that has to do with investments and standard instructions, can't change them. Only you have the ability to do that. It's the same with the bank account. The client can change their bank account, but you as the advisor can only view their bank account and can't change anything. The Centrelink schedule, so this is where all of the Centrelink schedules are kept, and if you need to request an ad hoc one or your client, simply click request a new Centrelink schedule and the ad hoc one will be generated and sent to the this inbox here, and the client or you can print it out, etc. The client inbox, this is the infamous Wealth Foundations inbox. This is where all of the correspondence is housed. Okay, so you'll see what the name of that correspondence is, and it's all in date order, and you're then able to view, print, etc. With the client advisor, all this means here is that the client will be able to see your details. So you remember at the beginning I said if you go to my details and you were to move offices or changed phone numbers, if you've updated that, that will then flow through to when the client clicks on and says my advisor, it will come up with your details and they will be able to see any of the fees that they're paying as well. Now I'm in an advisor mode, so your client won't even have an e-application. Now that is the client record, and that's Clearview Online for a client, and that was a pension client. What I do want to do at this time is just quickly open up a super client and show you one key difference between that and a pension. So remember, for the pension client, we actually had pension details and obviously produced the Centrelink schedule. Well, in this particular case, we have two separate buttons here that replaces those. We have a contribute to super instead. And what this does is print standard choice form. If you print that, well, the client can also go in here. That has the standard choice form and it has Clearview's details stamped on it already. It also has the complying fund letter. And here you will find the contribution types, the biller code that applies, but more importantly is the CRN. It's really important to understand that the CRN is not only contribution type specific, but it's also unique per client, and that's where they can find that their individual CRN for the contribution type that they are wanting to make. You've also got the option to register a direct debit. Again, you can't as the advisor because it involves a bank account, but your client can, so that's where they can do that. And the contribution form, that's where you can find the form that if they were to make an ad hoc direct debit or a check contribution, that form is required because that's where you're able to split that portion. So if I came in and said to you, I've received $150,000 inheritance, I'm looking at purchasing a BMW in the next 6 months. I don't know if it's going to happen today or tomorrow or in 3 months' time. I'm looking for a demonstration model. what do I do? You might say, look, how about we put $50,000 in guaranteed cash and we invest $100,000 in the investment pool? Even though my money in choice might be the investment pool, in that particular scenario, because it's a check contribution, I can then, by completing the the contribution form, I can then specify for that $150,000, $50,000 to go to the guaranteed cash and $100,000 to go to the investment pool. So that's what that form is. Now, this rollover super to my account is a really useful, nifty tool. If you remember when we spoke about the application process when we're using the paper app, that in section 2B, you won't be required to complete a rollover form. And that if you were having Life Solutions Super applications as well, you were waiting that you would actually complete the Wealth Foundations paper app. You would leave section 2B blank. You would have a little asterisk there that would say Life Solution rollovers pending Life Solutions acceptance. And of course, you've got your let's say two rollover forms signed and ready to go, and you've held on to them. You've sent the application form to us. The account now is set up. And the good news is that Life Solutions has accepted your client at standard rates. You have now two options with that rollover form. You can either send it to us and we will initiate that rollover for you, or alternatively, you can jump online and complete and initiate the rollover yourself by going onto the client record, clicking rollover super to my account, and by completing the USI, the super fund ABN, the member number, a specific amount, or is it a full transfer, whatever it is, you would then be able to initiate the rollover yourself via SuperStream on the portal. So they're the two options available, and that's what the rollover super to my account is. So it's a really nifty tool, again, adding to the efficiency and the overall application process. So that's the key difference. Well, that's a client record, and that's the key differences between a super record and a pension record. So a couple of other things I just want to take you through from an advisor's perspective. There are three basic advisor reports we've got. One is the client account balance report. This just shows you by product type, meaning pension or super. It will provide you with a list of clients that you've got in each one, with what balance they've got and the overall members you've got in both pension and super. And of course, at the end, it will tell you what your total FUM is in Wealth Foundations, along with the total members you've got, and that's across both of those products. So that's just really useful to have as a snapshot. Clients by investment report. What this report does is it gives you the details of each client and the FUM that you have in each of the IPS strategies, as well as any of the underlying investment options. So you can find out, for example, what clients you have in guaranteed cash and what your total cash balance is. And the last one, which I'm not going to do, is the export client list. All that does is exports all client data in a CSV format, so Excel format, telling for mail mergers, etc. We'll tell you what the client's name is, date of birth, email address, etc., etc., etc. So they're the three basic reports that we have for Wealth Foundations. My details, as I mentioned to you earlier, is where you're able to go in and change any of your details, and that will filter through to your clients. And we went through the My Tools at the beginning. The thing I want to show you though, which is not available to clients, it's just to you, is the advisor tool page. And this is where you're able to find any advisor brochures, any of the IPS quarterly reports, because Wealth Foundations also produces an IPS quarterly report, and those reports are emailed directly to your client. You'll be notified when those IPS quarterly reports have been issued via coffee catch-up or via some form of mechanism if you're outside the Clearview and Matrix dealer group. And this is where they will be housed as well, and that gives you the quarterly performance for all of the IPS strategies, including guaranteed cash, and it also houses the application form and some advisor tools. So I want to show you a couple of tools. The first one is the Wealth Foundations Blending Calculator. And this is the calculator that I mentioned earlier that you can use to blend different IPS strategies. So if you wanted to see what the aggregate asset allocation is once you've blended a few IPS strategies, or what the new ICR is, this is the tool that you've got. So in this particular case, we've got $1 million. We're putting $100,000 in guaranteed cash. That leaves us $900,000
to invest in the investment pool. We've split that between 50% active balanced, 50% Australian shares. This now shows you what the aggregate asset allocation is in each of the underlying investment portfolio via percentage and dollars. And it will also show you what the ICR is down here, and will also give you the aggregate asset allocation. So if we now changed, for example, let's say we've put 50% in the active balanced, and let's put 50% in the enhanced indexed fund. This now shows you, again, different asset allocation, and the ICR has now reduced, and it gives you the aggregate asset allocation over here. So this is a really useful tool. So I suggest that you definitely have a play around with that, and that's where you will find that. The other two tools I just want to show you is there's a Clearview Online user guide, so please have a quick look at that. I'll just make this a little smaller so you're able to just see that. So that's the user guide. You might say, oh, what was Sam going on about switching? If you go here, the table of contents switching, oh, it's page 33, it will then show you. So there's a user guide that's been put together for you. So please have a quick look at that. And of course, there's an e-application user guide as well. And again, I'll just make this a little smaller. If anything, if you guys please read page 3, and especially this last bit, it will tell you what parts of the e-app don't actually pre-populate. So please have a look at that. So they're some really useful tools. And the other thing I just want to quickly show you is the e-app. I'm not going to insult your intelligence by taking you screen by screen because I'm just conscious of time. We're almost approaching 90 minutes. Is this one here I've already done for you. So actually, I shouldn't go in there. If you wanted to access the e-app, you just go onto the e-app. And that's your first page. Now, a lot of people get confused here because it says tax file number, but if you recall, I said everything with an asterisk is compulsory. So on this page, you would actually put surname, given names, date of birth. Okay, if you have my TFN at this point, put it in. If you don't, that's okay, because we're not actually we're not submitting the application, we're just creating a shell, so therefore we don't need it. That date of birth will trigger the eligibility to contribute questions. In the e-app user guide that I just showed you, one of the sections will have all of the questions that are applicable depending on your client's age. So if you're interested to know what those questions are, I would seriously suggest that you have a look at the e-app guide. And then once you've answered that question for the eligibility to contribute, the next question will say, is this a super or a pension? Okay. Once you've done that, you move on to the next steps phase, and that's what I wanted to show you. So that's your core phase. So you put in those 5 details, and then that's the screen that you will appear, next steps. And that's where you can go in and complete details, the standing instructions, are there any rollovers, contributions, etc., etc. Once you've put as much information in there as you have, you would then generate that PDF as I mentioned earlier. That's been date controlled and stamped. You would then just handwrite any missing information on that version, and you just need to make sure that the latest version that is listed here is the one that you submit, and that's what we will process. The key difference between the paper app and the e-app from a rollover perspective is that each of the rollovers that you do via an e-app will generate a pre-populated rollover form. So you would need to submit those rollover forms with the application. But they're pre-populated with the information that you input here in the system. Whereas with the paper app, you don't need the rollover forms because we will initiate the rollover by completing that section 2B. Now that concludes our webinar with Wealth Foundations. So before I say thank you for your time, if you have lasted this long, congratulations and well done. But if you could actually send an email to training, training, training at clearview.com.au, and let me know that you have actually attended the webinar today. I keep a report on an attendance report, and I do monthly reporting to Ateet Heath and Chris Blacksland Walker about who has attended webinars. So if you have actually listened to my voice, I do apologize for the last 90 minutes, then you do need to obviously get credit for that. So please send an email to training@clearview.com.au letting me know your name, what office you're from, and who has attended the webinar from your office, and I will make sure that you go on that attendance report. At this time, thank you so much for your attention. Thanks so much for joining. I hope you got a lot out of the webinar today. If you have any questions whatsoever, please let myself, Ateet, Heath, or any of the BIMs know. We'll be very, very happy to help you. Again, thank you so much and have a great day.